And the history shows us that the bear market will last, so from peak to trough is usually about 12 months. We're already 6+ months in, so that's a good thing. And then usually the recovery comes in the next 6. I wasn't going to give up, but the market does give you humility. Like, there were days, and there were countless days, more than I could even count, where I would try something and I would lose, let's say out of my 10,000, I dropped like 2 or 3,000. So 20–30% in one day. And it's just like, it breaks your heart. And you're like, can I actually do this? Am I good enough to do this? Can I ever achieve my goal? And thank goodness I stuck with it. But there certainly was so many days where you just question yourself, like what am I doing wrong? Why is this happening? And luckily I was able to pick myself up and just keep pushing ahead. We came into 2008 and we had a relatively new company. We were just a year in or so. And luckily we had been warning people that something like this was going to happen. And it was very much where, reading the charts, you could actually see the hype, the greed that was out there, much like the stock market in the last year, much like crypto in the last year. It was all there for the seeing. And so I started to say, all right, guys, listen, there's going to be some sort of epic event. This isn't healthy what we're seeing, and you're going to see a corrective move. So we were able to kind of warn people, which started kind of our fame of getting well known out there on Wall Street, and then kind of translated to crypto in 2017, 18, 19, and so forth. Charts represent human emotion, right? So when someone buys, they're being greedy, right? They're expecting it to go up. When someone sells, they're being fearful. Oh my goodness, it might go down. And so charts, whether it's real estate, whether it's commodities, whether it's stocks or crypto, it can be read in the same ways. The same things work. So it's very cool like that. So people are people, right? Yeah. So they love you when you do well and you make them money. And then if you lose them one time, you're on their what list, and you just kind of have to accept it, and you just do the best you can. I think that's the strongest thing. And that's in any industry. What you're doing here, it's you do the best you can, and that's all you can do. But as long as you can look yourself in the mirror and say, hey, I put it all in and I put it all out there, then if someone's going to get mad at you for doing something, like when I'm doing a lot of these trades, I'm investing my own money. So it's like if I'm investing my own money and it loses, well, I lost with you. Like I obviously didn't put it out there unless I thought I was going to make money. It was 2012 where I first started to kind of understand what Bitcoin was, and I love the idea because I've always been someone who's been like fiscally responsible. I think being a business owner, you have to be. Being someone who's in the markets, you have to be aware of that. So I love the idea of the max run of 21 million being mined. I love the idea that it's an alternate to fiat currency, and I always hated watching the Federal Reserve. Like since 2009, when the financial recession, the collapse hit, it was all about just Federal Reserve printing, and it always bugged me because I'm like, wait a minute, I can't do that. Like if I take out a ton of credit cards, eventually they're going to shut it off, right? So we can't do that. How the heck can our government do that? And how is that sustainable long term? And so I loved that aspect of Bitcoin, of like, an alternative, a digital gold, if you will. And that's really where I thought about it. And I still remember vividly, and like I think it was 2012, I opened my first crypto account at the time, and I was so close to buying when Bitcoin was like at 100 and I missed getting filled, and I think I had my order at like 90. I don't know what it was at. But the bottom line is, it just went up and I just didn't chase it, and well, the rest is history there. I did buy it after at certain pullback levels, like in 2019, 2020 and stuff, but I'll be the first to admit I could have had it at 100. This kind of, for me, it was just that it did offer that alternative, right? So that alternative to what the government was doing, the idea that it can be transferred all around the globe so easily and so inexpensively. I think that's such an attractive thing. And I think there's a need in the world. Like every central bank is printing money just nonstop. And we now hear that the Fed is like pulling money back and they're raising rates. But let's be honest, we all know that at some point we're going to hit another nasty recession, and they're going to go back to what they know best, which is printing money. So even in this period where you're seeing Bitcoin drop, at some point the spigot's going to get turned on again, and they will start printing. So that's where Bitcoin gets very interesting. I mean, again, there will be a point. I'm not a hodler right now, but there will be a point where I accumulate when it probably gets down 20-ish, sub 20,000. So where I'm just like, all right, now we start putting in the big money, start putting in for the long term. Everything's going online, so they don't have to have as many locations. Obviously, having safety deposit, they still got to have those. I mean, that would be pretty messed up if they just closed those down and didn't give you your stuff back. But I think that the bottom line is we have to remember that the economy is driven by profits. I mean, that's the corporate kind of structure. And as it goes online and these companies have to make more money, they shut down locations, and then they don't have to pay the employees, they don't have to pay for the rent of that space, the lease of that space, and it basically ups their profit margins. So there's this, I mean, we definitely are in an economy that is profit driven, and that's what these stock prices go up on. And so that's unfortunately, I mean, it's horrible, but that's the way it is. I mean, everything's going to automation. And by the way, you now have a scenario where there's like 1.5 to 2 jobs for every person looking for a job. And the problem with that is that it's going to push this AI type of thing, which eventually when people do need jobs, they're not going to be able to find them because you're going to have these robots doing a lot of this stuff. So it's kind of a scary thing that we're going through right now in terms of jobs, is that inflation, weirdly enough, is being also driven by wages going up, right? So as people get more money, then they have that, then the companies have to raise their prices for their goods so that they can pay these higher wages. So it's this weird kind of
like
connective.
Where's the middle ground?
Yeah, I mean, that's the question. Where's the middle ground? And you know, you just don't know where that is. I mean, is it to raise taxes on higher income earners? Is it to do, you know, how do you adjust that? And honestly, I don't know. I'm not going to pretend to know. But there has to be something figured out. Eventually the dollar is going to go bust. It will be a while from now, but the thing is, so my projections and my forecast for what it means is like, you get to a point where at some point the dollar is no longer the reserve currency of the world, right? And my guess is it's going to go towards the digital yuan. And the dollar, so countries have to hold massive dollar reserves because they have to buy everything in dollars. As soon as the dollar is no longer the digital or the reserve currency of the world, they don't need to hold those dollars. They'll sell them on the open market. They'll dump them. That creates a massive decline in the dollar. The printing of money, the global debt, all of that stuff comes back to roost at that point. And I do think you get a scenario where the people of the US and really globally will demand a new currency. Now, it may be called the dollar, 2.0, who knows what it is, but I think it will have restrictions. So there'll be some sort of restrictions, and the people will demand this, where you cannot print endlessly amount. There'll be a stated run, or there'll be a slow expansion that's pre-stated. So everyone knows how many dollars there can totally be, or dollar 2.0. And I also think the Federal Reserve won't be in charge in their current form. So people will, there'll be a scapegoat essentially, and the politicians aren't going to take the blame. We know that. They'll push it on the Federal Reserve. And so eventually you'll have this scenario where I do think good comes from this, but it's going to be a long, hard road. I do think that eventually the Fed is going to introduce like a digital dollar, right? And then they're going to move towards that. But I still think that collapses because it's unsustainable, right? You just can't have something where you just print more and more. And then as you might give more people money, but then that just creates more inflation in the system and so forth. So, and then the dollar is worth less and less. And again, eventually you get to Venezuela type situation where the dollar is worth almost nothing, or maybe not even what's printed on at that point. So at that point, I do think you get some sort of massive kind of reset. And it probably involves a Great Depression type thing. I mean, we know the 100-year cycles coming up at the end of this decade from the 1929 crash of the stock market and the Great Depression of the 30s. And I am fearful that that might coincide. We saw the 100-year cycle with the Spanish flu and COVID too. So just keep that in mind. That's why the Fed is realizing this, right? So the Fed is realizing that they really screwed up by printing as much and pumping the stock market up and everything up, because asset bubbles just create inflation as well. And so now they're trying to bring it down to bring inflation in. The problem is, not only do you have still too much money in the system, but you also have the Russia invasion keeping oil prices high, which is inflationary, and the supply chain issues as well. So, I mean, it's all a mess right now. And you're right. There's a lot of people that do probably feel like it's a Great Depression right now. But what I'm talking about is like,
worse.
Like, it'll be so bad. I mean, I think in the Great Depression, and I could be wrong, but I think it was like 30 or 40% unemployment. And I mean, I do fear that we could at some point get to that. So we do have 4-year cycles. I mean, a lot of people were talking about how the cycles were getting elongated, but honestly, that hasn't been the case. It's been dead on to 4 years, basically. 2009, it was created. 2013 was the next top. 2017, 2021. So all we can do is look at history, and the history shows us that The bear market will last, so from peak to trough is usually about 12 months. We're already 6+ months in, so that's a good thing. And then usually the recovery comes in the next 6 months after, where it'll start to chop sideways and then begin to grind up. So I think, you know, as far as the charts are telling me, it's basically, we are in a bear market. Probably price still has downside to go, but look at it like you're going to get the best buying opportunity of your life. My general price target has us going to between 20 and 12,000. So I'll just start right around 20. Yeah, sorry.
Woo! Woo!
Sorry. But again, it's a short-term low. And you have to keep in mind is like, so crypto's never been through a period where the Fed has been hiking rates like this, where they've been sucking money out of the system. So this is a new uncharted territory for Bitcoin. And in previous bear cycles, Bitcoin's dropped like 80 to 85%, which actually, that gives me my low end target of 12,000. That's right around 85% correction from the 69,000 high. Now, I think that because adoption is continuing and more big money is getting in, I'm hopeful that it doesn't get that low. But as a trader, one of the things I've learned is like, never underestimate the markets, whether it's stocks or crypto or anything. It will surprise you. And that could be, by the way, that could be like, hey, it maybe just starts going up right now and surprises me too. So it can do anything it wants. All we can do is kind of be smart enough to leave enough dry powder where we can accumulate at lower moves if it does happen. And so you know, that's one of the biggest changes in my trading is like, when I was a young trader, I would be like, oh, this is the buy price. I'm going to buy it all here, put all my money in, and then it would go down further. And I'd be like, oh crap. And I can't do anything about it. Now I'm much more of like, let me put a little bit of money here. And then if it drops here, I'll add a little bit more. If it drops here, you know, and you kind of dollar cost average. And dollar cost averaging is like the best thing in the world. Because the market can do anything it wants at any time, you have to be in a defensive mode as an investor or a trader, because that's the way you will be able to react when something does happen that's unexpected, which is inevitable. You know, some things work out perfectly, like you draw them up on the board, and then other things don't. And if you can't react in those situations, you lose a ton of money. And I'm at a point in this career, I'm not ready to lose a ton of money. I did that when I was younger. When everyone is bullish, chances are its price is topping. And then when everyone is extremely bearish, price is bottoming. So sentiment is so important as a trader to kind of pay attention to, but you have to separate yourself out so you don't get caught up in the hype. And there were dead signals on Bitcoin back in November that it was topping. I mean, there were so many bullish people out there, and price barely pierced the high from April, and it came right back in. Then it did it again. And if everyone was bullish and buying, it should have just ripped, and it didn't. And that told you institutions were unloading there. And I saw that. I mean, it's amazing stuff. Yeah. Number one is don't chase something that people are pushing in social media. I think you have to be aware that, like, think for yourself. Think about, like, if you think about Bitcoin and you think about what the government's doing and you think about it makes sense why that should be. But, you know, there's altcoins out there that are junk that people are just trying to pump and dump. This happened, by the way, if you ever watch The Wolf of Wall Street, I've always said that what went on in that show is happening in crypto now. That was in the 1980s in stocks. It's now the 2020, 1920 and so forth in crypto. So just be aware of that. Is like, think for yourself, think logically. Don't ever chase because people are trying to get you an emotional response. And I think keep emotion out of trading. Dollar cost average, go into a trade always thinking you might be wrong. You'll be safer that way and you won't get hammered as much.